The dollar showing signs of weakness today, dropping against most major currencies. The big activity we saw in the euro and the pound. But as we look to 2009, is there a concern about a run on the dollar? With us now is CMC contributor Andy Bush of BMO Capital Markets, and Peter Schiff joins us again. Euro Pacific Capital is back. And Peter, let's just get into this quickly before we go into the overall picture for next year. Let's get your investment strategy for 2009. Lay it out for us.
Yeah, well, I've been running from the dollar for years, and I think pretty soon it's going to turn into a stampede. It's not just going to be me, it's going to be everybody on the planet.
So where do you put it? You're running away from dollar. What are you doing?
Well, you see, inflation is not a problem for the future. It's a problem right now because the government is creating inflation to pay for the bailouts. So if people don't want to get stuck with a bill, right, they don't want to have the currency that's being inflated away, which is the dollar. So they have to invest outside of the United States. They have to invest in companies that are denominated and pay dividends in currencies that are not the dollar. They need to own things that are negatively correlated with the dollar, like commodities, like gold, like silver, like other industrial and energy and agricultural commodities that have been beaten down, I think, unnecessarily over the past several months.
Peter, let's get to the commodities question, because demand for commodities has been weakening all year long. Are you saying that people's demand just to own hard assets, and in particular commodities, is going to sort of override that fear of demand destruction? Two
things are going to happen with commodities. Number one, supply is also coming down, and coming down dramatically, particularly given what's happened recently with credit. So there's not going to be as much supply going forward, but demand is going to return, not in America, but abroad. As the dollar collapses and other currencies rise in value, consumers all around the world who have been priced out of many markets are suddenly going to have much greater purchasing power. So you're going to see more global demand for commodities as supply is continued to be restrained, and I think prices are headed a lot higher. For Americans, they're going to go through the roof.
Andy, what's your take? We know dollars are flooding the market right now. We know the Fed's taking a lot onto its balance sheet. How do you play that next year?
Right. Well, I think you have to look across the world and see what countries are following this quantitative easing theme that the Fed has established now. I think you could look to the UK to develop something similar like that, perhaps Japan as well. Certainly, China's come through with a very large stimulus program. I don't know exactly what they're going to do. Right. It's hard to figure out. They're a little opaque with all their numbers. But I would say anybody who follows that kind of blueprint should see their currency not do so well. The one area that I know that's not going to engage in this is the Eurozone. And so that's why I think the Euro is going to have quite a big year, even though we saw some losses today for the Euro after it put in a high. Overall, I agree with the scenario that Peter had. I think the risk is that we have these short-term gains for the equity markets, a little bit for the dollar because of the deleveraging that happened due to the quantitative easing that's coming and the stimulus program. But longer term, and I was listening to Peter be very bearish about this before, and I'm right with him, I think this is a disaster. That long-term stimulus program, just to give you a glimpse of what we're looking at, I'm from Illinois, and we happen to have a very unusual governor here, Rod Blagojevich. He has a program that he put forward to the Obama administration for $34 billion worth of works that would supposedly generate 700,000 jobs. It's called Illinois Works, and I think we can run a lot of jokes from that.
Yeah, look, when they say stimulus, just substitute the word inflation, because that's all we're going to get. There is no stimulus here. The government is incapable of stimulating the economy. They have no real resources. All they can do is stifle economic growth. They can interfere with the free market's ability to create legitimate wealth. They can create a lot of inflation. They can create a lot of destruction, and unfortunately, that's all they're going to do.
Peter, I want to go back to our prior discussion and ask you two questions. One is, if the stimulus of the Roosevelt years didn't help end the Depression, and if the war and the stimulus that resulted from that didn't help end the Depression, what did?
Capitalism. It would have been a lot easier. It would have ended it a lot sooner without all the interference from government. But capitalism does work.
So the Depression would have just gone away. It would have just ended of its own at some point.
Well, it would never have happened. It would never have happened. We would have had a very severe recession. It might have even been called a depression because it might have lasted a year and a half, but it would have been over very quickly. But Hoover didn't let the market work. And, of course, we never would have had the bubble in the 1920s had it not been for the newly created Federal Reserve and the reckless monetary policy that we pursued during the 20s. So capitalism has a cure for the disease the government infected us with. And it's going to be a recession. If the government stays out, it's not going to be, it's sunshine and lollipops. It's going to be difficult for a while. We have a lot of people employed in sectors they shouldn't be employed in. We have assets that are overvalued. We've spent years and years squandering our wealth. We borrowed and spent too much money. We allowed our infrastructure and our industrial base to decay.
So if I extend where I think you're going with this, none of the steps that the government has taken this year you would have embraced at all under any circumstances.
No, the only thing they did right was letting Lehman Brothers go under. Everything else they did wrong.
Andy, jump in here.
Let me jump in here. Here's where I think, and I agree with Peter to some extent, but we know that financial regulation is coming, and I think this is really important, Peter, to some extent, because you're right about so many of these things. One of the things that's going to happen is they're going to re-regulate the financial industry, so we need to steer this to the right.
What good is that going to do? We're regulating.
Wait, Peter, let me finish. We need the kind of the right legislation to get this going to give us a world-class financial system and to give depositors and customers of banks some confidence to keep money in those banks.
No,
and
we
keep
don't.
That going forward.
That's the problem. We have too much false confidence. We should abolish deposit insurance.
Peter,
we should let the thing is you gotta have it's coming. So let's shape it, okay? Don't just stick your head in the sand and say we can't have this regulation. It's gonna happen. So we need
it's going to make it worse.
It. Let me tell you how this
always
works.
makes it
Peter,
worse.
give me a second, okay? There's about 4 agencies, federal agencies, that are running and looking at banks right now. We need to take that down to 1. So I'm actually advocating less regulation from all these different agencies. Combine that into one that can get a glimpse of what an entire bank looks like, not just the different parts of the elephant. That would be very helpful. And then include somebody who can also include insurance companies in the regulation that's coming as well. So that we have a whole picture of what to look at. That way we don't fall into the trap of having the ratings agencies think that these companies are much better than what they really are.
But you're placing your faith in regulators, in government bureaucrats to do the right thing. I have no faith in government. There is no history anywhere that they're going to do the right thing. I want to put my faith in the market, in capitalism and freedom to do the right thing.
I totally agree, but you know what? You have to face reality. This is coming, so let's take your argument.
An awful lot of guys, Peter, in the capital markets did exactly the wrong thing for an awful long time.
No, because of government. The government did that.
And don't blame that on the government. That's their own damn decision.
No, it's not. The government. It was the Fed.
It was not. It was their decisions to lever up 30 and 40 times. The government didn't tell them to do that.
Who dropped interest rates down to 1%? No, that was Alan Greenspan that did that. It's not baloney.
The government did not tell those people to lever up 40 times.
Look, okay, so you're going to go into a bar. Look, somebody pours a bunch of alcohol, and then you happen to drink it and get drunk, but you're not going to blame the guy that poured the liquor. Alan Greenspan did it. It wasn't private enterprise that drove interest rates down to nothing. It was the Federal Reserve, and the private enterprise didn't create Fannie and Freddie. The government created those entities and gave them their guarantee and enabled this whole thing to get so enormous. And in fact, the only reason I was able to predict all this stuff in advance is because I understood how the government was affecting the market and how it was distorting the market and how it was blowing up this bubble.
I've been part of this picture for several minutes and have not been able to get a word in edgewise, which is great. You're my great pals. But you're tilting against a windmill that is no longer on the playing field. The situation is what it is, and we can't let the free market animal spirits go. We'll be in a depression for the rest of our lives.
We won't.
No, we won't.
Peter, that's it. It's an opinion, Peter.
I really appreciate you being here with us tonight, Peter. Always a pleasure. Andy, thank you so much for fighting the good fight. Next, M&A and some troubling signs. That's next. This is CNBC Reports. We're back in 2 minutes.